Interest rates are at 7%? Are you joking? Oh my God. It's official. The Orange County real estate market is no longer affordable. Well, maybe not unaffordable for everyone, but it's definitely diminished the amount of buyers that we have here actively looking for homes in Orange County, California. That's because interest rates went up over 7% this week. So that's literally more than double than we saw from a year ago or even 6 months ago. The rates have been climbing, and especially this last few months, they have been fluctuating all over the place. So, you did stop by my channel, Monica Villalobos, Realtor here in beautiful sunny Anaheim, California, and I like to spin things a little bit more positively. So let's talk about the 5 reasons why buying in a high interest rate real estate market is actually going to be more beneficial for you as a buyer. Come on in. I live in beautiful sunny Anaheim, California. And well, I'm also a real estate agent here and I sell a lot of homes in Anaheim. I would say living in Anaheim, it's like a dream come true. Let's go take a look. First of all, offers do not have to be as scary as they were in the past couple years. None of this, oh, here's an extra $100,000. Oh, and you want to stay in the house for free for 6 years? Okay, I'll give that to you. None of that. A couple of reasons why it's a little bit easier right now is because those over asking price offers are pretty much gone. So you're not really seeing 100,000 over asking and all this crazy stuff that the seller wants, free rent back, stuff like that. It's more of a reasonable market, especially for you as a buyer. You do have a little bit more of safety nets now as well. So your contingency periods. In the past, you had to remove your appraisal contingency, otherwise your offer wouldn't get accepted. You had to have plenty of money in the bank. You had to remove your loan contingency sometimes. Some people would remove the inspection contingency, which I never recommend doing that. But those are all kind of negotiation tactics in the past. So now you're getting a little bit more leeway with keeping your contingency periods and keeping you safe during that escrow period so you don't lose your earnest money deposit. You also don't have to have the most money in your bank account. So the past 2 years, we were seeing people with a lot of reserves in their bank account. And the reason as a listing agent that we wanted to see that the buyer had enough reserves was in order for them to be able to pay the difference if the appraisal came in lower than what the contract price was. So we wanted to see that. Now that you're able to keep your appraisal contingency in place, that's actually going to give you a little bit more leeway in case the appraisal doesn't come in at value, although that's not really a problem right now that I've been seeing, but just in case, you can renegotiate with the seller. You may cancel if nobody can agree to anything, but we can go over appraisals on another video, and actually do have another video I'll link at the end. Another thing with offers not being so crazy is the option to ask for seller closing cost credits, which can be used for your closing costs, which can be used to pay down your interest rate. So even though we're at 7%, you can actually ask for a credit from the seller to pay down that rate. And of course, you're gonna have to talk to the lender to find out the cost for that so we can ask for the appropriate amount in our offer. Number 2, you get to take your time. There's less competition out there, so people aren't as crazy writing an offer as soon as they see a property. I mean, we saw deadlines galore. Sometimes we couldn't even get showings on a listing because they were completely booked up all weekend and offers were due Monday morning. In instances like that, it was really tough for a buyer, especially if you were too late in the game to get on the schedule, or if maybe you were busy that weekend, you might not have gotten the house. So in this case, homes are sitting on the market a little bit longer. So you do have a little bit more time to make your decision and choose the home that you like. Or, even just make the decision on whether or not you like the home that you just saw, rather than making the decision instantly as soon as you saw it. So that's one thing. Also, your escrow can be a little bit more relaxing. We were shortening contingency periods and escrow periods so short in order to be more competitive in the market. I'm not seeing as much of that. And so you have a little bit more time to get your inspections done. You have a little bit more time to get your appraisal done, to get all your documents into the lender, have your loan contingency, to be able to remove that. It is a little bit smoother and calmer during escrow, but still, I always recommend getting everything done as soon as possible once we're in escrows, just so that we can stay on timelines and close on time. Number 3, new home builders are offering way more incentives now. First of all, we don't have those long wait lists anymore. These new home builders are scrambling to find buyers for their communities. In order to do that, they're offering more incentives such as rate buy downs that I've seen as low as 3.99%. I've seen closing cost credits. I've seen design upgrades. It's very interesting how much they're offering now. It's kind of cool because if a property has been on the market for a long time, they're more willing to negotiate with that specific unit. Don't forget to have your real estate agent with you on your first visit when visiting a new construction community so that they can walk you through the process, walk you through the contract, and be able to negotiate on your behalf. Number 4, first of all, I want to say, disclaimer, I am not a CPA and I'm not giving tax advice. So it is going to be in your best interest to talk to your CPA to see if it's the right move for you to purchase a home. So the interest that you pay on your primary residence mortgage, you get to write it off. It is tax deductible, so that'll reduce the tax basis that you're paying. Let me show you on the first year of how much you're paying in taxes and how much of a write-off that could be at the higher interest rate versus, let's use 3% interest rate that we were at about a year ago. We are going to use the median home price in Orange County as of August 2022, which is $1,050,000 with a 20% down payment. That's $840,000 loan for 30 years at a little over 7%. That was the highest rate we had this week. Here's our monthly payment, but that's not what we're looking at. We're gonna look to see how much interest is paid on this loan in the first year. In year 1, you're gonna be paying about $59,000 in interest. You can see as the years go by, you do pay less in interest, but why is this important is because that interest that you pay on your primary residence mortgage is tax deductible. So it doesn't mean you get all the money back, but it is going to lower your tax basis. So $59,000 could potentially put you in a different tax bracket. So I'm definitely going to recommend that you talk to your CPA to see if it does make sense to buy a home with a higher interest rate. It could actually save you more money. And just so you can see the difference, where we were a year ago, let's say 3%, you're only paying just shy of $25,000 in interest for that year in year 1. So it is a pretty big difference in that write-off amount. But again, it's going to be in your best interest to talk to your CPA to see if that makes sense for you. Last and certainly not least, number 5, you can always refinance later. So if rates come down, give your mortgage lender a call. They might contact you first and let you know the good news. You can refinance to lower your mortgage payment. With that being said, we don't have a crystal ball, so I don't know what rates are going to be tomorrow or the next day or in a year or in 2 years. But what I do know is, historically speaking, when inflation is at all-time highs, interest rates also creep up to hedge against inflation. And once that inflation drops and is more reasonable, so do interest rates. So there's that. Historically speaking, they will come down. So it's also really important that when you are buying a home right now, that the payment is affordable for you now, and not hoping that rates are going to come down significantly so that your payment is a little bit more affordable. My suggestion is definitely buying something that's within your means now. Hopefully you can refinance in the future and save some money down the road. My crystal ball is telling me something. Oh, that was all for today. All right, everybody, thank you so much for watching. I hope you learned a ton today from this video. If you would please don't forget to subscribe to my channel if you haven't already. Like, comment on this video, tell me what else you want to hear, what else you want to see. But I will be creating more content for you to listen to, more on the real estate market, more on the city of Anaheim and surrounding cities. Stay tuned for more and keep watching. Also, if you are looking to buy, sell, or invest here in the city of Anaheim or anywhere in Orange County, California, I would love to be your agent. Super easy to get in touch with me. Just text me at this number here, or I've also linked my calendar in the comments below. You can go ahead and click that link and pick a time that's convenient for you, and then we will set up a time to chat, and I'll so look forward to chatting with you. Anywho, it is my time to go, so I guess I'll see you real soon. Bye-bye.